When I was in my 20s and 30s, I thought a 30-year mortgage sounded like an eternity, right? But as I've gotten older, 30 years kind of makes sense because you maybe get your mortgage at 35 years old. You pay for 30 years, and at 65, right around a retirement age, you get to pay off your house. And so the math for many people works. But for many of the young people who are having a harder time getting into homes, they are starting to talk about the 50-year mortgage, 50. And they are talking about how this might help with affordability and getting younger people into homes and promote home buying again for people. So today we are going to talk about the 50-year mortgage. We are going to talk about the pros, the cons, the reason this is even coming up, and I will give you my opinion at the end too, in general, about the 50-year mortgage. Now I'm going to put out a little notice or disclosure here. This is a very personal decision. So if the 50-year mortgage becomes available and you are interested in that, you need to go and talk to a financial professional, really look at the big picture and see if this is right for you, because we'll go through some math, and so you'll see that this could be a much more expensive way to own a home. But again, everything has pros and cons, and we're going to go through those. And again, just as you probably caught that I just said this, but as we are sitting here today, this is not an option. Okay, this is just being floated around as an idea. It kind of came to the forefront this week because President Trump put out a Truth Social, just kind of putting that idea out there as he does. And so it's now kind of in the media right now. However, this is not a new concept. I have been reading about the 50-year mortgage idea for at least a year, if not two. So this is not shocking to me that this is coming out, especially with the talk about affordability and Gen Z and making sure that they can live the American dream. So with that, we are going to jump into why this is even an issue. For a second, I'm going to take a little break and just welcome anybody new. I'm Lisa, been a financial advisor for about 15 years now, and I help people get to financial freedom as quickly as possible. If you're returning, welcome back. We're happy to have you. I have the glasses on because it is allergy season. You don't need to see my eyes right now, so hopefully the glasses don't drive you too crazy. I tried to get the glare out of them, but it is what it is. So anyhow, let's go through why the 50-year mortgage is even being discussed right now. There's a couple of things that have been happening in the economy to make people start thinking about new ways to get people into homes. And that's what's really happening is lenders are trying to find creative ways to help people maybe have lower monthly payments and get them into homes a little easier. That's the whole bottom line of all this. And I can see why lenders are kind of thinking of different ways, because the real estate industry has been hurt the last couple of years. Higher interest rates have made it very difficult for people to both either move from their current home to someplace else or even purchase their first home. And the average age of the first-time home buyer has gone up substantially in the last 10 years. So it used to be 30 was the average age of the first-time home buyer. Now it's 40. And so that is quite a jump. I mean, it's basically jumped up a year for the last 10 years from 30 to 40. And so people are a little concerned about this. And it is also very depressing for the younger generations that they can't purchase a home till later on in the life. And what happens is when they don't purchase a home till later, they're pushing off other things that they could be doing too, possibly saving for retirement, possibly, paying off other loans quickly, whatever that is. The home seems to be that anchor for a lot of people. They think, I'll purchase a home and then I'll start saving for retirement and I'll get this done and I'll get this done. And hopefully people are starting to switch things so that we're not waiting for the home purchase to do some of this other stuff. But typically, that's what I've seen is people think, buy the home first, then you do all the other stuff. And if we're pushing that off to 40, now we're starting all that other stuff a lot later, and that could be problematic down the line as well. And another thing that is happening, which if you're a homeowner, you're not too upset about this, but the home prices are just jumping up every single year so quickly. I mean, they have just grown astronomical in the last 10 to 15 years, I would say. And wages have not gone as quickly. They really aren't keeping up with that same rate. And so that gap between what a home costs and what people are actually bringing home is getting wider and wider, which can definitely cause a problem for the economy in the long run. So this is why all this is kind of coming to fruition, is really I would say the bottom line is the real estate industry is trying to find ways to generate more business and get themselves out of really a bad time in their industry that they've had with interest rates as high as they are and all these other things I just talked about. So let's start with the pros. Why would a 50-year mortgage be a good idea? One is lower monthly payments, right? So obviously if you take a loan and you stretch it over 50 years versus 30 years, you're going to have lower monthly payments. That helps people possibly get into the house easier than they would be before. It also allows cash flow to breathing room. So basically you could have more money in your pocket for emergency fund, for retirement contributions, for paying off student loans or credit card debt, or just basics that are getting more expensive, like childcare, healthcare, insurance. All of those are so expensive nowadays. Having a little bit of money extra in your pocket to take care of those things will definitely help people stay out of really bad debt that can happen. Another pro that I had not really considered much before, but I was talking to a friend of mine who's in the real estate industry, and she said, it's funny because I don't think of the 50-year mortgage as a payoff strategy, which is what everybody who's against it are showing in memes and stuff, like a 2-year-old getting a mortgage with their mom sitting there because, by the time they pay it off, they'll be 52, those kind of things are out there. And she said, I think people are thinking of this wrong. The 50-year mortgage is a leverage strategy. So it's like you buy on a 50-year mortgage for your starter home, you build up equity, and then you move over to a 30-year loan or a 15-year loan or whatever works for you at that point to the next home in, let's say, 10, 15 years. Or it can be used as a tool for somebody who is buying multiple homes for income properties or things like that. So it is really a tool that could loosen up and provide more opportunities for people in the real estate industry who are, trying to build a portfolio, or like I said, or just kind of going to be a starter home, move into a different home down the line. So that's the way they're seeing it. Is that right or not? It just depends on the situation. Like I said, it depends on your situation if that's going to make sense for you. Let's move into the cons. One is that you're going to be paying so much more interest over time. And people know that. That's why people are very against this on the face of it. And we'll go through actual numbers in a little bit so you can see what that kind of looks like. Also, you're going to be building equity much slower in a 50-year mortgage than you are in a 30-year mortgage. So if you don't have a mortgage, or maybe you weren't paying attention when you were getting your mortgage, most of the beginning payments of your loan are going towards interest, and not very much is going to principal. So it's down the line in your loan that more and more of your payment is going to principal. And so your equity build in the house is slow at the beginning, but it's going to be even slower in a 50-year mortgage because you have 50 years. So that loan, that heavy interest payment time is going to be longer. And so they're saying that that's not a good thing to have happen, especially if you're thinking of it as a starter home. How much equity are you really going to have in 10 or 15 years to be able to move into another house with a shorter term mortgage? Also, equity does help during downtimes in housing markets. Some people's homes in 2008, they were able to get through that time because of the equity that they had in their home. Those who didn't have equity in their home really had problems getting through that time. If we have all these loans out there with very low equity in them, and we hit a issue in the market, how is that going to affect those people in those loans? And that is a very, very good point to consider, okay? Because equity is kind of helps you get through some of those times. Having that cash in your home is really important. The last thing, I don't know if I necessarily agree with this, but another con that's been coming out is that they're saying if you put in a 50-year mortgage, it's going to stabilize the high prices of the housing market. So what they're saying is, just like every market, like the investment market, and every market goes through ups and downs. And we haven't really had a down in the housing market for a while. And during the down points of the housing market, those are kind of the opportunities people have to go buy a house at a more reasonable price. 2008 was a horrible time for a lot of people, but it was an opportunity for younger people to get into homes at a more reasonable cost, because we were trying to find a house before 2008. The prices were very, very difficult to even conceive of having to pay as a young newlywed couple. And 2008 happened. In 2010, we were able to find a home that was at a price that we could afford, and that wasn't just going to put us in tons of debt right away. Luckily, ours was an investment property, so I didn't feel as bad, because 2008 was a very difficult time for a lot of people. But they're saying that if we stop this natural flow of ups and downs in the market by putting this 50-year mortgage in, then it really is going to take out any opportunity for younger people to get into the housing markets during a correction period. I don't know if I necessarily see that, but I guess I could see their point. I just don't know if I necessarily think that one thing is gonna do it. But I could be wrong. I don't know for sure, and they don't know either. It's just an interesting point to bring up. Okay, so let's get into the numbers part of it. And I'll try to get through this a little quickly, because this is the part that everybody starts zoning out. But let's say you're getting a $400,000 home at a 6.5% interest rate. That is a pretty reasonable interest rate for the end of 2025 at least. So if you were to get a 30-year mortgage, now I'm rounding numbers just to make it easy. If you were to get a 30-year mortgage, your payments would be about $2,500 a month. You're going to pay about $910,000 over the course of the loan. So that is principal and interest. And so your total amount of interest you're paying on that house is $510,000 for a $400,000 house. Unfortunately, you're paying more interest than you are for the principal, but that's just the way it goes. But it's not too bad, I guess, compared to the 50-year mortgage. Once you hear the 50-year mortgage, that sounds like nothing. So for a 50-year mortgage, you'll be paying about $2,200 a month. $2,255 a month is the actual number. But you're going to be paying total for the house $1.35 million for your $400,000 house. That means you are paying $952,000 in interest on a $400,000 house. So you're paying $442,000 more in interest on the 50-year mortgage than you are in the 30-year mortgage. Let's let that sink in. That is a lot. There's a lot to be paying in interest. And so a lot of people are saying, well, and look at your monthly savings. That's not even that much. It's about $270 a month. Here's my issue with that point, though. It's really easy to say it's only $270 a month. But for some people, that $270 a month is the ability to buy it and the ability not to buy it. That's that difference. For us, when we were purchasing our house in 2010, that was the difference. We bought the house we bought because of $250 a month savings versus another house we were looking at. That got us into a home versus not getting us into a home. Now, of course, people could say, well, that was 17 years ago and $250 back then is different than, yes, you could say that. But to say, and it's only $270, everybody's in their own situation, and that could be that line between being a homeowner and not being a homeowner. So let's keep that in perspective too. However, is it worth paying, an extra $442,000 in interest over the loan period? And that is why my friend who's in the real estate industry was saying this is not really a payoff strategy kind of loan. So as we get into the end of this, I'll give you my bottom line opinion. For most people, the 50-year loan is not going to be right for them because of what we just laid out, those numbers, right? But as long as you have a strong strategy and you stick to your strategy, and it doesn't mean, at 15 years you have to sell your house and move into the other house or whatever, but you have to know that you can't just fall in love with your house and stay there for 50 years and not pay an extra price for that, okay? So if you're going to stick with the starter home idea, stick with it. If you are saying, I'm okay with paying extra in interest as long as I know, my rent's not going to go up because this is my mortgage and I'm building equity over time and all that stuff, that is totally fine. But people need to know what they're getting themselves into. And do I think the 50-year mortgage will come about? I don't know if I necessarily see it coming to fruition in the next year or two, but I think eventually it will, because I've been reading about it for a while already. And it's just going to be really important for people to educate themselves really well on what they're getting themselves into with a 50-year mortgage. Also, it's going to look a lot more appealing in a lower interest rate environment. So if interest rates start going back down to 3%, I don't think it's ever going to get down to 2.5% again, but 3-4%, then it's not going to look as bad, and it would make more sense at that point. So I think it's going to be a while till we see this come into fruition. I do think it is going to be an option at some point down the line, and I think people are just going to really have to do the math, as much as people don't like doing math. I get told that all the time. I don't like doing financial planning because I don't want to do the math. It is math, but it's not. So in math, the numbers are important. So that is my kind of bottom line. I think for most people that I know, it's not going to be the most viable option for them, but it doesn't mean it shouldn't be an option out there. So that's probably not as decisive of an answer as you would like, but that's my answer. And again, I'm going to put out there, if this becomes an option for you, really make sure you do the work, talk to financial professionals before you just jump into something like this. So I'd love to hear what your thoughts are on the 50-year mortgage. There's lots of opinions out there. And now that you have a little bit more context of pros and cons, has this changed your mind on what you thought? Has this made you dig your heels even more that you like it or you don't like it? I'd love to know. So feel free to reach out to me and let me know what your thoughts are. And we are going to keep on this affordability train the next couple of videos because I think it's really important. And it might be even longer than the next couple of videos. We'll just see what happens. Life moves pretty fast, right? As Ferris Bueller said. So until the next video, stay strong out there, be kind to one another, and we will see you at the next video. Bye-bye.